All right, GM everyone, welcome to our live stream for today. And today we'll be focusing on live trading with ETH. We'll be focusing on live trading with ETH, right? Right. So we'll be focusing on the direction of the market of ETH, what is currently happening to ETH now that the market is down, and we also try to explain why the market moves in that direction and why a lot of things tends to take place right there. Okay, so before we do that, and I would love to go to a previous class where we did some analysis for BTC through USDT perpetual, right? So right here you're going to bear with me, and I'm going to you come here to crypto. I think this was it. Never knew yet. Coming. GM, right? Yeah. We've seen what happened to the market. So this is what we did in our last class, and already, as you can see, BTC is already flowing in our direction, right? BTC is already flowing in our direction. So today we are going to talk about the trend. Yes, in our last class we explained order block, decision market, what is happening with BTC, and a lot of things that is about to take place. But nevertheless, we'll still be holding it. So let's quickly go to our main class today. GM, Cynthia, Simon, it's lesson time. Yeah, so fasten your seat belt, okay, and listen so that you will learn more. You can come to ETH to USDT. I think US dollar. Let's go for Coinbase. Right. So in our last class, I told you about the market structure, how the market is being moved, being respected. Right, we are going to do that. This is Ethereum. This is Ethereum network, and this Ethereum network. What? So as you can see here, the market was timing down. If you want to do some technical analysis in the market, I will always advise you to do it in a 1 hour time frame, right? I always advise you to do it in a 1 hour time frame, and once you do it in a 1 hour time frame, you will be able to see the market structure, where the market is going at. So for example, the time frames I normally pay is 1 hour time frame with 15-minute setup, or 1 hour time frame with 5-minute setup. That is, setup is my entry where I'm going to enter the market, because sometimes you are a day trader. I don't have to wait all the day long for me to execute a trade. So for a 4 hours time frame, you really see the way the market is moving, and its own resistance and support are all the supply and demand zone, irrespective of the current situation of the market, is always intact, right? It's valid. It doesn't have a weak point of interest. It has a strong point of interest, POI. So trading is always advisable that you follow up all these things you are doing. Okay, you're welcome. You follow what you are doing. 4 hours time frame, it gives you a very great setup. Right? It gives you a very great setup. So that is it. For example, in this market now, we have series of higher highs and lower low. Can you see the screen well? It's a nice view. If you can see the screen well, just tell me you can see the screen well in the comment section. So that's perfect. So this is 4 hours time frame. As you can see, we can see that the market was in our uptrend direction from here, and we now shift to a downtrend before the market sold off. From then, if you go to 1 hour time frame, that is still nice. If you go to 1 hour time frame, it's still the same thing. So what do you know that your story is valid is when you come to 4 hours time frame, right? Now this is my 4 hours time frame, and the last buy candle before the market sold off is this was the last buy candle before the market sold off. Have you seen it? That's the last buy candle before the market sold off. And if you also come here, this is also another block from here. Have you seen it? It's been respected. Then from here, when the market reached the other block from here, because here was our liquidity for Ethereum. Here is a liquidity. Anyway, you see any string is a valid one, and here also is also our liquidity, right? So you see the way the market was moving up. When that is done, you can come over, you can head over to when that is done, you can head over to, right, what we are drawing now. Let's just see how we can get it, if you still respect it in the 4 hours, in the 1 hour time frame. Have you seen it? See the way it goes. It's still respected. Have you seen it? In a 1 hour time zone. So this is a valid point of interest. Now guess what happened to the market? The market reached here, and it also, there was a liquidity here. Okay, there was a liquidity here, but it didn't sweep the previous lower low, right? There was a liquidity here, but it didn't sweep the previous lower low. Now guess what happened to the market? The market retests up. After retesting up, keep going up, keep going up, keep going up, keep going up. It hit that supply zone again, which time with the other block. After touching the other block, guess what happened to the market? The market timed down. Have you seen it? The market timed down. This was a mad profit. This was a mad profit using the 4 hours time frame. Have you seen it? So that is how these things works. The 4 hours time frame will give you the validity that, oh, this market is going in the downward direction, whereas the is going in the upward direction, whereas the 1 hour time frame is also gives you a very clear market structure, right? You can't just go to your 5-minute time frame to analyze the market. You are going to miss a lot of strong point of interest, which is literally not good. Okay, which is literally not good. So you can see types of liquidity here. You have a lot of them. Okay, you have a lot of them. So as you can see, this was another liquidity. The market came up from here. Guess what happened to the market? Guess what happened in the market? This was a swing low. It formed a swing high, swing low. Isn't it? Form another swing high, another swing low, another swing high, and this other one here, instead to form another higher low, it forms a lower low, right? And this other one breaks the previous higher low, right? Now guess what happened? The market spike up and broke it. So now what happened here is that it gives you a strong signal. This place gives you a strong signal that, oh, what is happening here, that the market may tend to turn down, to go down. And this breakout here, coming, this breakout from here, have you seen it? This breakout from here is a kind of this breakout. This is what I mean. This breakout here is a kind of fake breakout, because after happening now, you'll be saying, oh, it has broke my previous lower high. Oh, so that means the market is going to turn down. No, sir, that's not how you do it. That's not how you do it. Once you see a sweep of the previous low, know that the market tends to reverse, right? As you can see this, for you to enter a confirmation here, you'll be waiting for a serious change in character for it to happen, and which has already happened. Now, after happening here, guess what happened to the market? Guess what happened to the market? After reaching here, the market create another lower low, right, that breaks the previous lower low here. Have you seen it? It creates a previous lower low, and this is already in a form of a double bottom or a double top, head and shoulder, right? This is a kind of a double top pattern which shows that the price is going to go down, right? So after entering here, you won't have entered it because this is another liquidity for the price to take up, and I won't advise you to enter it here. You wait for the price to retest to make sure that this position you're about to enter it's nice and genuine. Right now, guess what happened in the market? The market came here, form another lower high. Now it's giving you a strong trend. This is a lower low, lower high, lower low, lower high. Boom. This is the place you're supposed to enter the trade. Yeah. Because it has created another lower high, which shows that our change in character is valid. So if you have entered this trade from here, you would have seen the amount of profit you would have made from this trade. Okay, so you will not enter the trade here. You go to your 10-minute time frame to see how the market works. That's where you will now be looking for your entry, right? This is where you'll be looking for your entry. Have you seen it? So this is a very nice setup if you want to assume, and you can tell me what type of liquidity is this, because beside it comes here, you're supposed to create another one. It breaks the previous low, then come back and pull it up. So that is just the skill and dignity behind this, right? And we can also try to check our other market. There's a trade I'm waiting for. So it was a previous one. coming. Was this the one I did? Okay, price hasn't reached there yet, so we are still waiting for the price to get there before we do anything we want to do. Oh, no wonder this is forex, but I want to show you something. Show you the current status of ETH. So now let's do a live analysis with it. Let's have a nice analysis with it. Alright, if you want to analyze it straight now, you are done with this. That's the other from our other block. We are done with this analysis, seeing how the market moves, creating. No right setup here. Setup is not clear. So so let me just explain one more time what we mean by type 1 liquidity, because we will lovely see it in chart, right? This is our previous. Comes here, break this, right? So you can see this, the type 1 liquidity. That's how it is. See another one here. This is a type 1 liquidity, market touches up, market touches down. So we will be expecting something to come this way. Then we set up a buy setup from here. You see, I set a stop loss slightly below this. So you see, this would have been a mad setup for you guys. Because what will you be expecting in this kind of case? We'll be expecting something like this. Though there will be a little inducement from here. We have a little inducement like this, like this, like this, like this, right? So from there we are out of the market. So what we are looking for is, this is what we will be looking for in the market trend, right? So that we can explain this together. This is it. Create another higher high. What happened again? Get another lower high. create another higher high, another lower high, create another higher high, lower high, higher high, lower high. What happened? Price spike up. This is exactly the same thing as type 1 liquidity. Because here, break of structure took place from here. Another break of structure took place from here. Another break of structure takes place from here. Another break of structure takes place from here. Right? Another break of structure took place from here. All these spaces are opportunity for you to take. All these small so that is it. All this place so this is it. All these are what? Liquidity. So this is it. So after observing this in the market and it creates an order block so I want to make sure you see what I'm doing. I want you to understand what took place here. See, after creating another block, because other block here is the last green candle, which is there before the price sold off. That's the other block in the sell direction, right? Keep going. See what I just want you to see what is happening. I just want you to see what is happening in the market. See what happened. See what happened in the market, farms. You see, this other block, say it was even a continuation of this previous one before the market sold off. You see, so from our knowledge of liquidity, after seeing this, that was the first one. You see, the market took out our former low. What did it create again? It created another lower low from here. You see, then we wait for the market to go up. Now guess what happened in the market? After the market spike up all the way to this zone, right? Guess what? And it touches the other block from here. Guess what happened to the market? The market had to calm down. So from here we're looking for a sell position. Guess what happened to the market? The market calmed down. You seen it? That is a massive profit. Well, you set your stop loss to be around here, just slightly the bar. So I'm keeping space for spread in terms of anything. That's why I'm keeping space for spread. Okay, I'm keeping space for spread. So that is just it. We won't have even wait to this place, but I've just taken it down to this. That is 8.6 raw ratio. So that is, pretty cool. So this is it. You see how the strategy works very well here. Yes, the strategy works very well here. So if at all you wanted to, if at all you wanted to enter a trade there, this would have been a massive profit for you. So let's try to backtest this strategy where the liquidity, where we have a order block at the top trend, and see what happened in Ethereum, right? So coming down here to 5-minute time frame, or you come down to your 15-minute time frame, 5-minute time frame. So this is incredible. So this is it for 5-minute time frame. This way you would have entered your trade, the market time down. So can we keep backtesting? Because backtesting will help you to to be consistent in whatsoever you are doing. Backtesting will help you to be consistent in whatsoever you are doing. So let's keep searching Ethereum. Today is U1 Ethereum. We go back to our 1-hour time frame to check out this strategy. You can try it anywhere. We first of all look for a swing. You keep it somewhere there. Right. You keep backtesting. Keep backtesting. Keep backtesting. Keep backtesting. Right, this is a consolidating market. Keep backtesting. No, that was also a consolidating market. All right. You have seen this. You have seen this. Market. All right. Looking for. All right. This is another example, I think. Remember in our type 1 liquidity. At our 1 liquidity, I told you want to have something like this first. Come here. Come here. Come here. Come here. Boom. That's the type 1 liquidity. Can we get that here? This is it. Alright. This is it. This is the market. This is our this is how we do it. This is our higher high. He created another higher low. He did not break this one. Comes here. Are you seeing what is happening to the market? That is it. Now, instead of the price to go up, what happened to the market? See what the market did. See what market did. Market had to come here again. Create another swing low, forming a bottom. One, another one. They move up, right? Now it has break this other structure right now. Now guess what happened to the market? Market came down and was in a consolidation form. Now the market sold off, right? Market sold off. So after market sold off, it forms the order block, which is the last buy candle before the market sold off. This was our order block, right? The last buy candle before the market sold off. Let's keep going. Have you seen what happened? It's a close of it. It's a long bearish candle, so long bullish candle. Have you seen what happened to the market? Each time the market touches it, the market has to calm down. This shows you that there is a high possibility trade, right? But I won't advise you to trade in this zone. I won't advise you to trade in this zone. Market is consolidating, right? This is called consolidation zone. This is called consolidation zone. Area of consolidation, right? This is area of consolidation. This is area of what? Consolidation. Right? This area of consolidation. I won't advise you to trade in this zone. I'll wait for you to wait for the market to retest back to its up to its point of interest, which was our order block. And this is our order block. This is our order block. Order block. This is our order block. Have you seen it? You wait for the market to reach this position again. Now guess what happened? Guess what happened? This market reached that level again. Market had to calm down. So this would have been the right time for you to sell by setting up your stop loss in this place. You set your stop loss here, right? And that was your entry. You give a little space for trade, for spread to take place. Then you look for here where another order block at this bottom, the last red candle before the market sold off is here. I'm gonna take this one because this week is because of this week, this one is bigger. Guess what happened? Would have taken it here, waiting for you to reach. So as a trader which does not really want to take, due to your risk management, you would have dragged it to this point, right? You would have dragged your trade to this point. You would have dragged your trade to this point so that you won't really take that much loss, right? So as you can see already, 4:5 to ratio. So this is how you trade it, and after that, this is your analysis. You wait for the market to go. So what in your trading, what you just be observing is your point of interest. As the market reach your point of interest, and is that point of interest a valid one? That's what you should be asking yourself. Is that point of interest a valid one before you now move into taking trade, right? So you can now come here to your can now come here. This is not it. This is not it. This is not it. Let's keep session. Right. Let's keep waiting. Coming. Why it doesn't want to work that? So after that, after you have analyzed your trade, because this in forex is just like we have trading view where we analyze our market, then we go move over to the broker where we want to execute our trade. Okay, so currently now what is happening here is that we analyze our market for a proper review using the trading view, which is what I also recommend. And what again? So the market is moving. See the same thing. So after doing that, after analyzing your trade over here, you then move over to your KuCoin exchange. Please, if you haven't signed up in the KuCoin exchange app, because that's where we're going to enter our trade. We also have an ongoing streaming campaign where you can also participate and earn rewards. You know, KuCoin is the only app we use. KuCoin is the only app we use while trading. Okay, while trading crypto. It's one of the amazing app I recommend you, each and every one of you, to use. Okay, each and every is one of the app I recommend each and every one of you to use while trading. Okay, so you come to KuCoin. Sorry about the interruption. You come to KuCoin app. When you come to KuCoin app, I'm going to unlock it using my fingerprint. You just come here, you select your pairs that you want to trade, ETH, and you do a lot of things here. You can come to this trade, and you move to futures. You select what you want to trade by tapping on it. Once you tap on it, you are going to have a various list of tokens here. I think this app is very easy, and each and every one of you can decide to trade on it. Okay, you can come and tap ETH per USDT perpetual, and you enter the trade, right? You enter the trade. So that is it. Thank you very much for your time. I'm going to end this live session here, right here. I'm going to continue next time. Bye. Thank you for your time. I really appreciate it. Bye.